So, dear friends, today, 18th of June 2022, I'm going now to introduce a very, very good trading system. What I have found here on one of my favorite trading channels on YouTube. This is the page of Traders Landing. Subscribe to this channel, very good channel. And the trading system I love to introduce, and I'm using it right now. This one, the Bollinger J. So for better understanding, first of all, to this system, go also to this channel of Traders Landing, watch this video, and then you can come back, or you can also stay here. So I'll first of all show you how to take the big moves. I have included, or I have better said, I have combined already this trading system with my own, and the results are much more tremendous. And also the risk management, trade management on the same time is as easy as you will find. The first thing we need is the Bollinger Bands. Okay, you need first of all the Bollinger Bands. The Bollinger Bands, you take out the basis line. So just upper and lower, I've already made it thicker. So it depends on 20, so you can put it now on the time frame just on chart, or you can also to get it maybe on well, let's say for example we are now in 1 hour time frame, but I put the Bollinger Bands on 30 minutes. So, and we see now we have just another signals, right? So we see, for example, that I put it a little bit down, then I have much more signals, but I'm doing it a little bit smooth. So I put it again on chart, first of all, okay, on default on chart. The Bollinger Bands is telling me the signal confirmation or the pre-entry, as also mentioned on Traders Landing. The second indicator you need is ATR bands, ATR period at 14, and you need then to put the ATR multiplier upper and lower on 2, right? So, and for better visualization, I put it in orange, also in orange, and I use then the step line. So that way we can adjust better the lines and our stop loss. So now we have two indicators. The first indicator, blue, is Bollinger Band, pre-enter conditions, okay? Before we enter, we need also some preconditions to confirm it. The second indicator is orange, ATR bands. This is where I put my stop loss. This is the risk management, okay? Then the next one is I use here the EMA in white. This is for my current trend on hourly chart. I use 3 different EMAs. All of them are set the length on 200 Okay, this is very important. 200, that gives me the direction of the trend. The first one, I put the EMA on 1 hour because I am using 1 hour. If you're using, for example, another time frame, or let's say, for example, 15 minutes, then you go to 15 minutes. If 13 minutes, then 30 minutes. If 1 day, and so on. The second EMA I put on 200, but daily, and the last one on weekly 200 period. Okay, so I have all these EMAs in one chart, and I can exactly see where is my trend, my current trend, or the price currently. All right, so for better understanding, as I told you, you need to watch the video of Traders Landing. Okay, so I play a little bit.
$200 and color it in white. The 200 EMA will be used as a trend direction indicator. The second free TradingView indicator are Bollinger Bands. Inputs will be kept at default, and I'm going to remove the basis line. Bollinger Bands are envelopes plotted at a standard deviation level above and below a simple moving average of the price. Because the distance of the bands is based on the standard deviation, they adjust to volatility swings in the underlying instrument. This study will provide a precondition for entry. The third study are average true range, or ATR bands. I am going to set the value at 2 times the ATR for both upper and lower bands and color them in yellow. The average true range is a volatility indicator that attempts to measure recent price movements. This study will be used to set our stop loss and thus our take profit levels. The fourth and final study is the KDJ indicator, also known as the random index. This will be the first time I am featuring this indicator on the channel.
And we go here to KDJ. This is the yellow line here. Okay, so KDJ by Collinsi or Collinsi. The period we set at 25. All right, and if we go to style, as you can see, I have checked out the 2 plots, right? We take only the third one, and also the levels only 2080. You can also say, well, 0 and 100. I have not tried it, so I'm making it default. All right, so, and first of all, the indicators I have now added are this ones, 3, and the volume profile, and this indicator, to have more confirmation, because I love to take bigger trends on low chart frames to maximize the profits with the lowest amount of risk. And what I found out is that this system introduced by Traders Landing is working fantastic. But now I am going here, first of all, to play a long example how the system is working, and who can better explain it than Traders Landing itself. So we take a watch.
First, price closes below the bottom Bollinger Band in blue. Second, the KDJ goes under the 20 line during the pullback. Then price must close back above the bottom Bollinger Band. Fourth, the KDJ then moves back above the 20 line but does not cross the 80 line on top. Finally, price must be above the 200 EMA in white. Our rules are met when this candle closes. That is our trigger candle. We place our stop at the bottom ATR band, which is 2 times the ATR value of the corresponding candle, and target 3 times risk. And long example 1 hits the target. If you enjoy this content, please make sure to click that like button.
Content, please enjoy and subscribe to his channel, and if you like, to mine too. Well, this is an example how we take a long. So first of all, the price has to be above 200 moving average, EMA 2 moving average on the chart. Then the price must first come over the upper band of Bollinger. Then we wait until the price is coming back and closes. Then the KDJ rises up that way over 80 and then comes down, and then we take the, we see here, comes down, and then we take the trade, and on the ATR bands we put our stop. So 4 steps, okay, very easy. And now for the short trade,
below the 20 line at the bottom, below the top Bollinger Band. And after a while, short example 2 hits the target. I'm going to show you one more quick short example. Price is below the 200 EMA in white. There are candles that close above the top Bollinger Band in blue. Price then closes back below the top Bollinger Band. Finally, the KDJ indicator goes above and then back below the 80 line and is not below the 20 line at the bottom. This is our trigger candle. The stop is placed at the top ATR band and the target is 3 times risk. And the final example hits the target. I'm going to give you some great ideas on how we can improve. The KDJ goes under the 20 line during the pullback.
My mistake, I'm sorry for the long. Yes.
First, price closes below the bottom Bollinger Band.
If you're going long, so you see this one, the white line is 200. Then the price goes below the Bollinger Band. KDJ goes below 20. The price comes back and closes above the lower band. KDJ comes above 20, and the next candle is our long entry. Okay, so it was a mistake of mine. So this was number 1, then this was number 2, number 3, number 4, number 5, number 6. That's all right. So we are going back now to my chart. So, and I am someone I have found out, for example, if you can see here, but the trend has already started to its short. It is Bitcoin versus the US dollar. So we see here that the market ran up, then becoming below the moving average of 200. Then the market goes higher. Then we have a period of consolidation. Okay, so and so on. And then finally, we are coming down. All right. So how we can now optimize that? First of all, this system is great. What we can see here is, for example, that we have multiple times where the Bollinger Band is becoming larger. Here, for example, here, for example, here, for example, here, for example, or also I can see here, for example. And what I didn't know, but now learned, knew, and that's great, is each time after the Bollinger Bands is become, or the deviations are becoming larger, what happens then? We have a phase of consolidation. So we see here, we have here, then we have a consolidation, then it's becoming bigger, then we have a consolidation, then the market falls after a big move. So what happens then? We have a consolidation, then we have a pullback, and the market is running more down. And we see now where is Bitcoin now. So where is our Bitcoin? So Bitcoin versus the US dollar. So very well. So the price is here, and we see now currently we are at 19,418. The lowest price as of the day has been at 17,605. Wow. Now, I am a big friend of using the trend lines. And before doing this, so we see here, we use the Bollinger J system. Then we get here, first of all, a signal, right? So make it better. Okay, we see we have a signal here. The market price is below 200 moving average. It's below, is above the upper side of the Bollinger Bands, and at this time our KDJ is far away, okay, is far away from the Bollinger, from the 80% line. So if we now miss this situation, what happens then? We have to wait until the next one, until the market comes, and we see the next possible situation is here. Okay? That means we had the possibility to get here already in the market, right? But we are not taking advantage of this. So therefore, I use my confirmation. First of all, we see here that our price is now breaking below the trend line. And of course, at this time, the KDJ coming a little bit late, but it's not reaching that. Okay, don't matter. What can I do? I use a very simple method, and this is where I am using now two RSIs, okay? The first RSI is plot on 9. The second one is plot on 200. Okay, this is the 200 RSI. So this is 200 RSI, and this is RSI 9, okay? So, and we see here first of all, the price is coming down. It is below the moving average, very nice. It is, of course, below the Bollinger Band, but I can also wait till the market comes near or upper of the Bollinger Bands of 1 hour. For example, here, the market is below RSI 950% line and definitely has broken and is definitely below RSI 200, and that's a good confirmation that the market is now going down. The second confirmation I have is my trend line. So I have two trend confirmation, three. The first one is the price is below 1 or 200 EMA. The second one is below my trend line. The third one below my 200 and 200 period of RSI. And what happens next? I have included two other indicators. This is a daily VWAP. So these lines, as you can see here, we see here, this one, these are multiple day VWAPs, 1 day VWAP, 2, 3, 4, and 5 day VWAPs. And we see continuously the price is here below 1, 2, 3, 4, 5 day VWAP. Then it comes shortly above daily VWAP, but falls again, but never reaches the second day VWAP. So again, below it, below it, below it, below it, below it, below it. So, and all the time, the market is below 200 period 50% line. So this is my second, of course, below the 200. So I know now the market is rapidly, continuously moving down. Okay. So the next indicator I use is the volume profile. We see here, this is the upper side of the volume profile. This is the lower, okay, volume profile low. And each time the market tries to come in this area, the market starts to move sidewards. So why? Because at this level the number of buyers are very low, but the numbers of sellers are very high, and the amount of sell volume is higher than the amount of the buy volumes. This is the area where the market moves or is losing its momentum when rising up. So, and then what happens then? The market needs to go back in minimum to the, here this level is the POC, point of control. So I can use now this technique, first of all, to say, okay, if I want to trade Bitcoin, then I take only short trades. Okay. Now where can I combine the Bollinger Bands? For example, here, okay, I have already sold the market here. The market moves down, okay, and I can combine now. I can combine now, and I see here. Here is my entry short. Where do I put my stop loss? My stop loss I put on ATR band, okay? And if I see here, the market has already reached this level, and we see here we have a risk reward ratio 3.66. That means if my risk is 1%, my take profit is more than 3%, in this case 3.66 times higher than my risk. If my risk is 2%, then my profit is 7.2% of the account. If my, and so on, all right? So, and I have also here, for example, right, we have a risk reward ratio to 305, and now this is the latest. So the current position I have taken, I am now at about 54 cents. But all the time the market is only in this area, but is not going higher till it has broken this break line. Why? Because my 200 RSI move, RSI is below 40, and we see here it is over the or above the Bollinger Bands, and now the KDJ is moving back, and that's exactly, and now we see here the market turns green, profitable position now. So, and this is, for example, a moment I can combine perfectly with this, with my own trading system, the Bollinger J system, perfectly. So we see here I have already, for example, the Bollinger Band system once here, then here, then here, okay? Then the next one I am trading well is always support resistance, and the support resistances I measure here. Each time the market, for example, in a downtrend is coming back, then it goes up. Where it's going up? Well, for example, here where we have the high volume, because big institutions have, who are 10 to 15 biggest institutions, are manipulating continuously the market. These are very, very big financial institutions. And of course, their information and power, financial power, is very high, but they leave the market always with a footprint, when we exactly know where are the highest transactions, okay? And that cannot be hid, and that's the only information we have about the biggest institution. We never know with how many, how big, for example, the capital is, with how many billions or trillions there are in the market. It's impossible. But we can only see what prices are really interesting and important for them, and this is only to find out with volume profile. And these are the real support resistances, the peaks here. We see here, it's, if I compare, for example, the peaks, we see here the peaks are here, finished here, this one here is finished here, this one is finished here, but this one is finished here, this one is finished here, this one is finished here, and now I can see here, okay, the peaks are much more bigger than here. If you see, for example, the peaks, the maximum peaks here is on the long side is smaller, but the maximum peaks downwards, right, if the market is going down, is becoming bigger and bigger, and this is an indication that the volume on short trend direction is increasing and rising, and that tells me the market is short. The market will drop much more lower. How much? Also we can find them if we use different kinds of volume profiles for long term, because the price is always going to that point of POC. yes, also to the historical level. So you can, for example, this is Bitcoin, right? So, but I make another example now of another market, for example. So last week, for example, everybody was talking bullish. This is the market of Brent crude oil, which is coming now. And currently the market is at 114,888. Okay, so we see the market, right, moved. So the market moved higher to 127, and everybody was buying the market, but it was not a good decision. Why not? So we see here again, right? So I put it here. Okay, so we see here, for example, right, a good trending market. The market went up to 124, came back to 120, went up to 125, came back to 123, went up to 126.20, came back to 121, then went up to 127, but it was enough, and then the market dropped, yes, in less than 7 hours to 114. It is over 1,300 pips or $13 in less than 7 hours. So what does it tell me? First of all, the market takes too long to go short, to go long. That means the momentum and the speed of the market to go long is very slowly. Secondly, the market takes too short, too fast to come down. That means here at these areas we have very strong sellers, very, very strong sellers. Thirdly, what happens here? So we see the most important price traded, 70% of all transactions was at price between 123 to 124, so very strong resistance. Thirdly, at this blue area, the market is not able to move higher. Why? Because each time the market goes higher, we see here the peaks are becoming lower, lower, the volume is becoming less, right? So on the other side, we see below the 75%, we have a peak here, we have a peak here, we have a peak here, and so on. So, right? So we see here downwards is the potential much more higher, right? So, and what does it tell me? The market dropped massively, right? So the next indicator I used was, for example, the trend line. So we see here after this trend line, the first signal was here. Then it was congruent to KDJ. It was congruent to RSI 9 below. And now we see here also the uptrend of the oil is finished. The oil came here, and finally at the price at 121.01, well, let's say 121 to 122, the uptrend was definitely finished as the market dropped down, right? So then here, if we see now our VWAP confirmation, we see here the market is, this is right, this is my VWAPs, you see here, okay, we see that make a green color is better maybe, okay, so our 1, 2, 3, 4, 5 day VWAP is moving higher, 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 and then the second confirmation is the market falls for the first time below 5 day VWAP, okay, but we are here plus 50, so we don't do anything. It is first of all a sign for us to wait and do nothing. The market is over 200 moving average, but we don't buy, we neither sell, we do nothing. It is time now to watch and consider what the market is doing next. But it is an indication the market is above 200 moving average. It's above, but very close to 50 line. On a 9 period, it is below 50% line. And also the KDJ is not congruent, but we have now two of three signals that are telling us, all right, the market is not going higher. Much more importantly, we now market is moving in this area, very weak area for buyers, so we don't do anything. Secondly, we see here, we have here a high, the next high is low high, low low, then the market rises again, higher high, higher low, but then is not able to make higher highs. Then the market again makes a new 2 times higher highs. But what happens to our RSI? We see here the first one. Okay, this is all right. But this one, the market makes a new high. And then here the market makes a new high. What happens to our RSI? The RSI is falling. It is divergence. The market is definitely losing power. What do we know now? We know the market is losing power. We will not make higher highs today or tomorrow or during the next time. But the market is above 200 moving average. If we take now, it is also above our trend lines, right? And now it's time, and the market then is continuously moving below our 5 day. Here it's coming up, but we have here the divergence, so it doesn't take longer, the market falls again. And from now here, the market is continuously below 5 day VWAPs. Here, for example, then the market falls below 200 moving average, then the market falls below trend line. Our trend line continuously is low in here, and here we have the last confirmation. The market is falling down. And now it's time to use the Bollinger J system for the pullbacks, but on the short time, right? So what happens then? The market falls until the last trading hour to a position where the number of sellers, well, the last sellers are there, so the market takes a pullback, but the market closes where? On the low first, and we see here now at the beginning of the trading, this area was like this, and at the end the volume has been shifted higher on the short side, and the closing price is here on the low, and this is always an indication that on the next trading days the market will make a high and then it will drop down. So that means on Monday, Tuesday, keep watching where the market is opening. Well, let's say for example the market opens here, right? The market makes then a high, do nothing, the market goes below the opening price, and then you can sell the market, and the market will go to 109, 108, 105. My first target is 108, the second one, so the first target is 108. First of all, it will break 110, 108, then 107.50, then 105, then 102, 100. All right, so now for all those who are trading on daily chart, let's see, this was the hourly chart, but let's see what is expecting us on hourly chart, and that's really interesting. So, and we see what can we see on hourly chart. Can we use the system also here? Yes, of course. So we see here the white line is 200 moving average of 1 hour. Okay. The yellow is 200 moving average daily of 1 day, and the last one is 200 moving average of weekly, okay, 1 week. So where are we now? Are at 100 is our moving average. Now if we look here, we see here we had many times, okay, first of all to the upside, then we had breakups, okay, the market moved higher here, everybody was happy, but now look what happened here. How is looking to the downside? Oops, we see here, if we go now with our trend line, we see here we dropped massively, very high. We see here the green candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. It takes 15 green candles that the market's going up, but it takes 3 red candles that the market comes down and losing more than well, 1,400 in 3 candles and 1,350 points or basis point in 15. Who's stronger, the reds or the greens? And of course, the reds are stronger. The bears are stronger. We see here each time the market dropped here, the market hit back. Dropped here, the market hits back. We see here, dropped here, the market hits back. What does it tell us? Here, bears. And if I don't use neither this confirmation, what does it tell me? Here, the footprints, the banks, big institutions sell massively, right? So I sold oil at 126.80, and on Friday, that means 3 days later, after my setup, the Russian minister said, we will increase our production, and the market fell. Very nice, right? If you are trading, for example, now on daily setup. So let's say if we are, for example, taking this position on daily chart, and we see here, right? So, and my first target at 108, but my next one is at around 100. Okay, so it was, I'm sorry. Yeah. So it is the setup. Want to risk reward ratio in this case is 1:1.75, but I have on the same time moved down my stop loss, and currently my stop loss is in profit. So that means if the market hits back, but it's going over 124, I will take out the position with a plus, okay, a little bit profit, doesn't matter. But if the market goes down to 100, what happens then? We see here I have a risk reward ratio of 9.544. That means my risk is 1%, my take profit is 9%, 9 times higher. And it seems that the market will go to 100, all right? So this is the first indication. The second indication is, where is our POC? 75% traded volumes of the last months here. Here. At 115.68. Where is the price now? 114.88. What does that mean? The market has broken a very important support line. The support line is now the resistance line. So it means in the next days and in the next days and weeks maybe, the market will play down in this area, and each time is coming up. So we are going back to 60, 68, right? That is telling me who? The volume profile. Why? Because volume profile is logic, facts, footprint. It contains all numbers, historic numbers. Wherever the price bar was, for example, we say here at 76, right? What happened then? The market dropped up. So we see here, the market dropped up. What happened here? The market fell down. Where to? To 104. At the beginning, the POC was here. Then the market went up where? To 120. came back to that place, 104. Went back to 116.17, came back where? To 104. Went up again to 116.17, came back where? To 104. Now again, tried again to go to 128, is coming where back again? We can tell, a minimum to 104. So, and in this case, our moving average is also moving higher, so the market will go maybe also to 135, right? So, but at this level, then the market will fall, right? So this is a logic in behind of that. And we see here, if we can, for example, use the Bollinger Band. So the price, so I missed first of all to find it out here. All right, very nice, very nice. So what's happening here? So we see here at our RSI, below 50, we had divergence, right? Higher highs, falling highs, fantastic. Then also divergence on KDJ, fantastic. So 2 bears 2, bulls 0. It's below the trend line 320, right? Then the next indication, the market was at this area, logically fall down here, bulls 4, bulls 0. And then what's very important is here, 200 moving average, 200 RSI. The 200 RSI is where, yes, you can tell, is currently above 50%, but what happened? It's falling. It's falling. And exactly if we fall below 50%, the market will sink massively, maybe also to 45 to 50, somewhere like that, right? And the last instrument I use, and this is very nice instrument, is this instrument. It is an RSI plotted to VWAP RSI, and we see each time the market, okay, then the color gets red, the market falls. Each time the color is green, the market is rising, right? We see here again, rising. What's happened here? Here, RSI and VWAP falling, RSI and VWAP falling, the market falling. It's green, the market rising. The market rising is color green, right? So on daily basis, and if I go back to hourly, and we see here, yeah, definitely on hourly chart, so we see BOC below 200 RSI 50 period, 9 RSI also below 50, VWAP RSI red, definitely red, and going below 25. My KDJ is down, right? And the prices below Bollinger Bands, the prices below my moving average and below my trend line, and the prices, the market goes up to the BOC, and here the sellers sell much more, right? the consolidation. This is the big meaning of the consolidation. Where is the liquidity? They are mobilizing much more power there to let the market go down much more. So I hope you have enjoyed this video, friends. Have a good day and have a great trading day.